you playing it safe in your investments? Right now, that's pretty hard to do. Well, last year we were making dollars. Right now, it's pennies. But in times like this, I always think back to some advice I got from my father. He said, if you can't be safe, be smart. I'm a money guy, so when I think about being smart, I think about John Maynard Keynes. And Keynes advised us that you're smart when you're thinking about animals, in particular when you're thinking about animal spirits, the profound emotional drives that cause people in some situations to grab all the stocks they can buy, and in other situations to start dumping and clean everything out to the bare walls. There's also another kind of animals. There's several of them. And we should be thinking about those in the current investment environment. First animal we want to think about is the sheep. We've seen a lot of sheep over the last 5 years. People flocking together, going to the standard investments, things like ETFs, like indexes. Now, when the market is good, when the economy is strong and things are going up, you invest like a sheep and you can't lose. On the other hand, when things get stranger, it gets pretty hard to win. So you find sheep who are finding opportunities, but they're mostly short opportunities. The sheep are aware this is a stock picker's market. They're aware there are certain categories that are going to suffer as a result of this COVID situation. So you look at something like restaurants. You look at a stock like Darden's. It's got great brands. It's got Olive Garden. It's got Red Lobster. But it's also got a ton of fixed rents. And with all the social distancing stuff cutting revenues by half to 3/4, that's going to make it hard for them to make a lot of money. Or you look at something like United Airlines. Think about it yourself and ask yourself, when in the next year am I going to really look forward to getting into a steel can filled with COVID zombies? Now those are plays, but they're negative plays. There are a lot of us who get nervous about shorts because, as we know, if you get it wrong, you can lose a lot of money. And Keynes again reminded us that the market can be irrational longer than you can be solvent. So you may want to think like another kind of an animal. The fox. Now the wily fox thinks a lot about the deeper elements inside issues. So it looks at plays that we've all seen talked about and says what's really going on there. Let's take an example that's pretty current. Let's take Apple. I think about Apple right now because its situation has changed a lot with the recent comments from the White House. Apple's a great company. It's got great products. It's got great management. But it has one great problem. And that problem is that it finds itself in a war with the White House. Apple didn't choose this, but it got it anyway. The White House wants to fine American companies that manufacture overseas. And if you're Apple, good as you are, that's a problem. This is an issue that might not sound all that bad. You're sitting there thinking, well, let's bring all those American jobs back, it'll be great. That sounds good, but it doesn't work so hot if you're familiar with that industry. I spent several years working in supply chains in Asia, and one of the things you see when you're over there is that the production facilities are huge and they're really complicated. So this isn't stuff you're going to just throw into a suitcase and go, hooray, we're back to the United States. This is a 2 to 3 year problem. And if you've got a White House that says, well, we'll start finding Apple right now, and Apple hasn't got an option of doing anything about it for 2 to 3 years, what you've just done is hammered the value of a great American company with no real good result. There's also a deeper issue. When you're a Fox, you know something about Foxconn. Foxconn is the largest fabricator for Apple in China. Foxconn's in the middle of an interesting project. Foxconn is reducing its workforce through automation. It's getting rid of 1 million people because the guys it's got working in China, all those folks who are making $3 an hour, they're too expensive to be competitive globally. Now, if we're thinking, wow, we'll move all those jobs back to the United States, we then have to figure out either how to make those guys really efficient or psych ourselves up for the fact we're going to have 1 million U.S. workers who are getting the worst deal of any workers in the last 100 years. Then there's another way of thinking about this from an investment standpoint. It's actually looking at where are the opportunities. And I'm going to suggest, thinking about Foxconn, thinking about all of that supply chain stuff, supply chain is an issue you may want to look at. You might want to think about companies that benefit from the contrarian position. They assume all this, bring it back to America stuff is going to fail miserably, and we're going to manufacture globally because that's the way things work better. That leads you to look at companies like Global Ship Leasing. Global Ship Leasing specializes in sale-leasebacks of large oil tankers and carrier ships. That's a good business. Right now you've got tankers stacked up like cordwood outside Singapore, and you've got container ships along both coasts because it's moving slow to unload because of COVID, and that process is probably going to continue for the foreseeable future. Not only that, with the global ship lease bonds, right now they're paying about 10%. When I look at that and I compare that to a 10-year T-bill, which is paying a little over 0.5%, and I say the global ship leasing bond is backed by tons of physical assets because it's backed by all those ships, those giant oil tankers and container ships, that's a pretty interesting situation. So I'm going to recommend, as you go forward and as things keep changing in this post-COVID environment, make sure you're thinking like a fox and thinking deep, and don't necessarily just follow the herd like the sheep unless you wanted a future career as lamb chops. I'm Fred Croft, and I'd like to remind you to stay skeptical, stay smart, and stay tuned.